So again, just because the trend line is broken, it doesn't mean you go short and expect the trend to reverse. The reversal of trend is a pattern. And while over in here you could have lower lows and lower highs, and if you were trading a 5-minute chart, yes, you could scalp short on a 5-minute basis. But the overall trend on a bigger scheme of things is that you're still making higher bottoms, higher bottoms. And if you're a swing trader or a day trader or a weekly trader, this is just insignificant noise usually. Now, one of the most basic tools of all in trading is the use of angles. And there are many ways to draw trend lines in various angles, but we have to study the basics first so we understand why we use them. They are often used for selecting stocks, both on the long and short side, and also big momentum movers. But the basic principle behind them is there is always a correspondence between time and price. And the only time we're going to see a reversal in the market is when there is an equality of time and price, or a major proportion. So what I mean by an equality of time and price, if you had a top on a stock at $50 and you went over 50 days, you might be at a point where there was a time correspondence of 50 days with the price of 50, and you might get a turn. But there would definitely be a correspondence if you started on a $50 price, let's say, and went up, and when you got to 100, being up 50 points, you were also on the 50th day. So that one-to-one correspondence is what it takes to reverse the market and create a bear market out of a bull market, and vice versa. And we will study this later, but first we want to examine the basic geometric angles and where they come from. So in a basic angle, we call them geometric angles because they come from the geometry of a square. Your basic unit in high school geometry is over 1, up 1. That's the diagonal of a square and is the 45-degree angle. If you bisect a square in half, you'll get one twice as steep, or over 1, up 2, or over 1/2, over 2. So this would be a 2 by 1, and you can do it on the downside too. You can go over 1, up 1/2. The strong angles are the ones above the 45. The 1 by 2, which is 63 3/4, and the 1 by 4, which is 75 degrees. You should memorize these degrees. So with a protractor or with an angle tool, you can draw these standard degrees anytime. And most ones, as I say, we'll use are the 1 by 2. Some call it a 2 by 1. It depends on which is your time unit and which is your price. The time unit might be over 1 unit and up 2, so you might call it 1 by 2. Or if you're referring to the price increment, you could call it a 2 by 1, up 2 units of price and over 1 unit of time. So it doesn't matter if you call it a 1 by 2 or 2 by 1. Just know if it's above the 45, these are the angles on the upside, these are the angles on the downside, and those are the things we'll use most often. You can do these without a protractor by just putting a series of dots on a piece of paper that are equally spaced. You go over so many dots, so here we would go over 1, 2, 3, 4 over and up 1, so it could be a 1 by 4 angle. You could go over 1 unit and up 1, and that would be a 1 by 1 angle. On this chart, you can see I laid these series of dots over here, and then another row of dots down below them. So we went over 1, 2, 3, 4. This was 5, and I went down 1, so it was really a 1 by 5 angle. Here's a 1 by 2 angle, over 2, down 1. The line through here is a 1 by 2. And the rule of angles is such that when they break one angle, they must go to the next one down. They break that, they'll continue down to the next, to the next. They bounce off each of these angles. So they do give us some sense of where the support and resistance may lie, and they also give us a little bit of a sense of a potential targeting area. If they get through one angle, they'll go to the next one. So they're very helpful in that regard. But what we really use angles for is to select the stocks we're going to trade. I've taught many people, and some of my most successful traders, ones who've went on to make tens of millions of dollars, have learned this simple rule of the angles to focus on the very steep angles. I have one trader I know who will only buy stocks starting on a 4 by 1 or greater angle. The 4x1 shows a lot of momentum. These are stocks like Google and Baidu and Apple, and you often see them go up many, many points a day. The average trader or the beginning trader is afraid of these stocks. You think they're going up a flagpole, and they assume the higher they go, the bigger the fall. But this is the exact opposite. The more momentum you have, the more powerful the move, the more buyers than sellers there are, which is creating this momentum. So when a 4x1 angle breaks, it can only go down to a 2x1, which is still very strong, and it will often recover and go back to the 4x1 again before it breaks again. So the stocks that are above the 1x1 are the ones we're going to focus on being long, and we particularly want to focus on ones that have steep angles like 4x1 and 2x1. We do not short these stocks. These are stocks that when they break angles, we want to stop ourselves out of longs and look to buy a dip. The ones that we want to short look like this. These are angles where stocks are going down and down and down, and if they're going by a steep 4x1, even if they break above that angle, they'll only go up to the 2x1 before they fail and come down again. So these are stocks that we select for shorts. They're easy to see. You can draw a line on your paper, and it is going down. You do not want to short the stocks that are going up. You want to stop yourself out of longs and buy dips. On these stocks, you want to cover your shorts when they rally and put the shorts on again when they get to resistance. So this is how we select our longs and our shorts. Here's an example on the Goldman Sachs chart in the top in the year 2000. This was when the bear trend started. And I put some angles on here. I put a little square grid on so we can see the steepness here. The first one was halfway through this first grid. There's 4 grids. So normally if the first angle was right on the grid, it would be a 4x1, which is what we see here. Over 1, down 4. Or the 2x1, over 1, 2, down 4. And then the 1x1 angle is 1 full unit. Over 4 units, down 4 units, that's the 1x1. Early on, it was an 8x1, over 1/2 of this unit and down 4. So this is the 8x1, and we can see that it's bouncing around the angles. It's hitting the angles. When it breaks one, it goes down to the next angle, rallies up to the angle, bounces around our angles. And it follows basically the 1x1 angle down. When it finally breaks away from the 1x1, it does not necessarily mean we want to go long this stock yet. The angles are still pointing down. These angles are not pointing up. And we went into a long basing period for 6 or 8 months here. And this was basically a stock to avoid during this time because you just get chopped up. And then after the end of this time, it went down again and it would resume its short. So always try and stick to the stocks that are going along these steep angles to be short, and pick the stocks over in this case where it would be going up along a steep angle to be long. So we can put these fan angles on. Most software packages have fans, and it doesn't matter what kind of fan you use. It's just the rule that they will hit one fan angle and they will go down and find support and bounce around these various geometric angles. Here too, the fans are all going up. This is a bullish stock. It may have plunges periodically that result in higher bottoms or bottoms at about the same levels, but when they break these trend lines, it's only to liquidate along and wait to repurchase as soon as they finish their little correction. This is an uptrend and not a downtrend. Some of the origins of the geometric angles are such that if we took a little box over our initial impulse wave here, and in this case I took the initial impulse wave and drew a circle around it, and then what I did is I did a segment of 90 degrees off of the circle. And so you can see the diagonal of this square is a 45, and half of that is a 2x1. And we can see, well, it looks like it's following this a little bit. This was like a midpoint. There's a little support here, but it's not perfect. And the problem is, just because we plot things straight up for the price and horizontally for the time, the stock doesn't know that. The stock is going along its own momentum move. So to get the correct measured move on a stock, we really want to adjust our angle to the axis of the movement. So what I've done here is I've taken the first impulse wave axis and drawn a line. I have my same circle going around it, But now I draw a 90-degree quadrant from the axis of the movement, make my square, and now my 1x1 primary angle hits perfectly. And my 2x1 also hits perfectly. And here's a 1/2x1 over here that hits perfectly. And the center of this little square, which is right here, gives me big horizontal support. So this is the correct way of making real 1x1, 2x1, 4x1 angles, although it's a little difficult and a little time consuming. So most traders don't do it except on daily charts or weekly charts where you're looking for long-term, accurately drawn angles. It's a little difficult if you're trading a 5-minute chart to keep drawing these type of figures. And so there are other ways and techniques we can use to do that. This same diagram, by the way, if we blow it up and put a second box on top of the first, we can see that as it escaped from the box here, it went to the center. And the final top over here was at the top corner over here. And some of these other angles that came up along here were also support and resistance. We'll often find we can use traditional angles. And the first thing I ever did when I started trading was buy a little plastic triangle, 2 of them actually. There's a 30-degree, 60-degree, and 90-degree plastic triangle, and a 45, 45, and 90 plastic triangle. And you can get these in any art supply stores for about $2 a piece. And I would just overlay them on my computer screen and use a draw line tool and just draw my angles in. So this is a classic 60-degree angle, then here's a 45-degree angle and a 30-degree angle. And we can see they bounce around between these angles pretty well. I'm not trying to be too precise here. I'm just showing approximate declines, approximate support, places where they may stop to give you a rough idea. And again, note, this is an uptrend we're being described. The rate of momentum may change at times and then zoom up, but the trend is still up. These little plunges are nothing more than the short-term cycles being superimposed on a longer-term trend. When the short-term cycle dies out, the longer-term trend reasserts itself, and they try and go up along the 45-degree primary angle. You may ask in here, too, why am I using all these different angles, 1x1, 2x1, 4x1, 30, 45? The thing is, individual stocks and commodities and futures and Forex will have their own angles that they have a tendency to gravitate to. And you must know the various possibilities you have. Once you find a set of angles that work on your stock or commodity, it will usually work for their entire life long, as long as you don't change your scales dramatically. So once you find one of these angular momentums that work, you want to stay with it for quite some time. But the traditional Gann square approach is the one I use most of the time because of the geometric relationship of time and price. And an easy way to draw them that I've found is to assume that your first leg up is a 4x1 angle. And this is an assumption I'm making. I don't know what this angle is, and I don't care what it is. But usually, in many cases, if you take the first leg up that's fairly strong, and you draw a little box around it and put the first 1/4 of the box on it, then the 2x1 angle will be right in the center. The 1x1 angle would go up through the end. Now, if you look at this, you'll say, well, this is really a rectangle. It's not a square. The truth is, because the scaling factor of our prices and our time can never be perfectly scaled. At least if we draw a grid in this fashion, we can draw a quick little grid that will be in proportion with our scales. In other words, if we have like a retracement tool that we put here at the top, 100%, and divide it into quarters, 3/4, 1/2, 1/4, we know this is 100% of the move. That's the scale. If we then can have boxes drawn in it, we can drag it out and make this the 1/4. Now we have a time and price grid where from the 4x1, they top out and they go down, and the low is exactly placed at the 2x1, and we're exactly at the 50% of the range, and it catches our 1x1 angle. So it's a perfect fit. The 4x3 angle is an oddball angle. Sometimes I use these, but they're not always that important. But the 1x1 over here is the most important because after this one is broken, you usually end the bull market. Note also, too, that there is always a doubling. this first unit is 1 unit, and there's a doubling of the 1 unit to the 2 by 1.